This is Scott Becker with the Becker Private Equity and Business Podcast. Today's discussion is 3 signs the apocalypse is upon us. So here are the 3 signs. The first sign is Americans have racked up record credit card debt. And this is a horrendous thing. Credit card debt has gotten to about $1.1 trillion or so, throwing off about $200 billion in interest payments a year. And this is a direct, horrible situation for Americans to be in as they live more and more paycheck to paycheck. Just a horrendous situation as people want to live a little bit more nicely than they can afford to live. So credit card debt, the first sign that the apocalypse is upon us. The second sign is, and this is sort of the canary in the coal mine, is starting to see sort of slowly and softly big corporate America doing layoffs quietly. More and more I get messages from friends or people that we've done business with. We're having a layoff at this company. I'm trying to figure out my next thing. And this combined with is sort of quietly, stealthily happening, more and more of these layoffs. Some not so stealth as these big companies try and show that the Mark Zuckerberg-esque in trying to be more efficient and more profitable and trying to prove to the market they can be profitable. But this is really scary for families that have debt, have mortgages, have racked up too much debt, and then suddenly find themselves without enough emergency funds and so forth. A really bad situation. So that's the second sign that the apocalypse is upon us. The third is the concept of the worldwide economy slowing. And we see that sort of, the biggest challenge there is sort of the artificiality of the Chinese economy and, not really being able to trust, are they growing or not growing, but really seeing now that some of the chickens have come home to roost and having some challenges in sustaining some of the growth rates that they were talking about. That a huge push of growth as they move people out of rural China into the cities and built factories and so forth. But then it was found that a lot of that growth was done through debt and other things, and a lot of that building wasn't sort of real building or real sustainable. So you got 3 big signs. You got challenges going on: record credit card debt, the more hearing of layoffs, and then third, the worldwide economy is slowing, particularly driven by the Chinese economy slowing. We'll see how this all plays out, but it's a little frightening, particularly at a time, at least we're at a spot where the Fed has raised rates so much that at some point they could reduce those rates to try and provide more liquidity to the economy if we need it. In any event, thank you for listening to the Becker Private Equity and Business Podcast. Thank you very much.